quick hello to everybody on today's webinar. So my name is Grant Meyer. I'm a financial advisor based out of Minneapolis, and a quick, two little minute spiel on who Advisors for Good is. All the panelists on today's webinar, we all got together and created a nonprofit really to try to spread the idea of impact investing, ESG, SRI, topics we'll talk about on today's webinar, to try to spread that throughout the advisor community and have an impact on the world. You can learn a little bit more about us on advisorsforgood.org. And on today's webinar, what we're going to be talking about is we're going to have Tara, who will be emceeing everything, and we're going to be interviewing a few different advisors who are just experts and awesome people in the world of impact investing, ESG, SRI, and we'll decide exactly which acronym we should use and what that all means today too. And the reason that we're all here too, by the way, is we don't have anything to sell. You will have to buy a timeshare at the end of the webinar though, just so you know. That's how we make our revenue, is timeshare sales. But other than that, there's no ESG products. Advisors for Good is built by financial advisors for financial advisors. We're a community of advisors just trying to spread the message and further the cause. And with that, Tara, I will turn it over to you so you can get things started.
Thanks, Grant. Welcome, everyone. I am very excited to be here. This is our first event, and we are going to be talking about ESG. We're going to put up a poll real quick, and please fill that out so we can customize some of our questions as we go along. And if you have questions as we go ahead and put them in the Q&A, and we will answer them at the end. So I will be posing questions to our three panelists, and then hopefully at the end, 15 to 20 minutes of open Q&A from all of you attendees. So my name is Tara Bansal. I live here in Princeton, New Jersey, and I probably know the least about ESG, so that's how I got to be the moderator here. But I'm very excited to learn more. And what I'd like to do to start is have the three panelists quickly introduce themselves, and to make it a little more interesting, tell us a hobby that you took up during COVID. Igor, how about you go first?
Hi, everyone. My name is Igor Tsukerman. I'm a CEO and Chief Investment Officer of Eureka Wealth Solutions, which is a wealth manager in New York City. And we specialize in thematic and impact investing. And I guess as far as a hobby, one thing that I've picked up during COVID times is sports memorabilia collections. So this is, I've always been kind of impartial, but all of a sudden when sports went away, this seemed like the thing that kept me closer to the, to the events. And apparently I wasn't the only one. If anything, I noticed that sport memorabilia as an asset class, if you will, actually went quite a bit up. So I was very excited about that.
What's your favorite thing you got?
Probably Michael Jordan autograph.
Nice.
Wow.
Yeah. All right. Frank, how about you?
Well, thank you. Frank Byskov, wealth manager at 44 Financial in Bethesda, Maryland, just outside DC. I guess my practice is built around like sustainable investing, as I like to call it, aligning values, like financial life with the personal values of my clients. A hobby I took up was having a toddler. I've spent a lot of time on a playground, and so trying to like incorporate a workout regime into like not looking too silly when you can only do 3 pull-ups is a challenge, but it's fun, and you can always play it off like I'm trying to teach my 2-year-old how to do pull-ups.
So did you start rating all the playgrounds in your area? And keep a list?
On various issues, but shade being one of them,
Key.
and having something tall to climb on is always fun.
Great, thank you. Ella, how about you?
Hi, I am Ella Taylor, and I have a firm called Ella Financial Advising in Oakland, and we offer financial coaching to help people figure out, their ideal life, their goals, all of that, and then combine that with financial planning and socially responsible investing, as I call it. And I took up kind of two big hobbies during COVID. One, I started bead weaving. Look, I made a bracelet. I made a bunch of bead weaving stuff. And then I took up long walks. I just went out into the hills and went wild. So, yeah.
So our poll, can everybody see the results of the poll that just came up? And we have enough people for seeing some good, interesting data. And looks like everybody is here for the right reasons, and we're going to talk about all that. First off, everybody seems to call, well, I feel like ESG is the new hot ticket. Everybody's talking about it, and you hear many different terms. So our first question is pretty basic, yet it's not as simple as you would think. Igor, I'd like you to start us off on what is ESG? How is that different or the same as sustainable investing, responsible investing, and impact investing? Can you tackle that one?
So obviously this is the right starting point, because I think everybody on this call and most investors have some intuition, some sort of an idea of what they understand those terms to be. But I come from a quantitative background. To me, everything starts with a definition, and definitions of all of those terms are very fluid, I would say, at the very least. So let me try to give you an idea of what I typically work with, and keep in mind that these are not universal sort of definitions. So let me start with impact investing, and these are definitions that you can pull from the three probably most influential websites as far as general knowledge, investment knowledge, and economic knowledge is coming from. And as you can see, basically, all impact investing is the type of investment that is beneficial to social and environmental effects. It's in addition to the financial gain. So these are basically the same definition said in different words, and they're obviously vague because what those benefits are and how they should be measured and how they should be used is not part of the definition. That's largely open to the interpretation. So the socially responsible investing, the SRI, basically the definition of that is integrating the social and environmental factors into your analysis. And often what I've seen, values-based or ethical investing or sustainable investing are basically used interchanged with that. And if it sounds very similar to impact, it is, but it's a little actually better defined. And from practical purpose, from the way that portfolios are constructed, what SRI entails typically is the so-called negative screen, which basically means the idea is you start with your investment portfolio as you would without it, and then you take out the things that you don't want in your portfolio for all those reasons, ethical or environmental or sustainable issues that you do not want represented in your portfolio. I'll talk about it in just one more second after I talk about ESG. So ESG, the hot ticket, that's the headline that's been everywhere, especially over the last couple of years. And all it is, again, the definition of it is that it's just a set of standards based on those three general concepts: environmental, social, and governance effects. Again, the definition doesn't tell you how those standards should be implemented by companies or by investors, what to look at, what's more important. That's largely still up to the investors and the advisors and the asset managers. But again, from the point of view of portfolio constructions, typically what ESG does is conduct a positive screen, meaning it starts from scratch and determines what should be in your portfolio based on that criteria. So, for example, this is what negative versus positive screen is. So on the left, you have the negative screen where you start with a portfolio, determine what your set of criteria is, and then you remove anything that that doesn't fit that criteria. And here are a couple of examples. These are not recommendations to buy or sell, just for compliance purposes. These are just for information purposes. But the example for the first one is an ETF that starts off with Chinese large cap equities and then takes out anything where the Chinese state owns, I believe, 20% or more. So this is fairly straightforward, and it implements some of these socially responsible ideas by taking things out from the existing index. The second one is probably even simpler to understand. This is literally just US large caps that takes out anything that's for fossil fuels. So that's what SRI typically that's how it works from the practical perspective. And the positive screen is the opposite, and this is what you would typically see with an ESG. You would select a theme, and you would only, and obviously theme is a whole different concept that I don't want to go into, but you'll see from the examples, you basically only want the selections that fit that criteria. So the first example is clean energy, pretty easy to understand. You just pick everything based on the methodology of what constitutes clean energy to you, and that makes up that ETF. And the second example represents the S in ESG, and this is the gender diversity. Again, depending on the methodology, you pick only the companies that fit that criteria, and you put that in your portfolio. So that's hopefully the beginning of the definition of how I personally look at it. But again, it's open largely to interpretations, and different people still may understand and use it differently.
So Igor, I'm assuming later we're going to talk about some of the proprietary screening and ways that you go about doing this. Is that correct?
Absolutely.
Okay, great. Frank, anything different or you'd like to add to what Igor
Well,
said?
I think the terminology changes as to who you're talking to. If you're talking to a well-versed industry specialist, you go into whatever, as Igor said, there's so many different terms, and they mean different things to different people. I like the word sustainable investing because I think it has a positive ring to it. It's something that is easy for clients to appreciate. So, okay, so it's investing, it's sustainable, both for me and for everything else. Even though from a practical perspective, portfolio building, I use like both positive and negative screens, different options, depending on the circumstances. In general, I find ESG to be the blender version of it, like more the Wall Street side. Once you get into more like the impact, it's very specific in different ways. And sustainable kind of floats in the middle, as I see it, where you take the best of both sides and try to build something that works for the situation.
Thank you. Ella, what would you like to add around these terms?
I think I agree with Frank, where I do a combination of negative screens and positive screens, because I think there's certain industries we just don't want to invest in. Like weapons are always going to be weapons. They're not going to not be weapons. But then things like oil and gas, sometimes I don't draw such a hard line if they're actively moving to renewables. And then I like to, choose fund managers who are really like pushing them to, keep moving in that direction. And so that's a big one, I think, that a lot of people talk about is like, do you divest? Do you engage? And so I think it is like really a question of kind of the impact that you want to have. And then I think around the language, I think is socially responsible investing, because I love the term sustainable, but I think of it as like, as people, we should be thinking more about like our responsibility to the planet, to other people. And so that's kind of where I come from it from a language standpoint, but I don't know that that necessarily reflects differently than the investments that I would choose than Frank would.
Okay. Even just hearing this brings up a bunch of questions for me, but we are going to keep to the script and I will move forward. Frank, Ella, how about you? What motivated you to get involved in this type of investing? And I don't know if you want to give a little background on how you got started, and then what motivated you?
Oh, that's funny. I was going to start there because I was a women's studies major. So I'm like, save the women. And so that definitely plays into my investment approach and my financial planning approach. But then the environment is, I worry about I stay awake at night being like, oh no. And so, I think about one of the ways that I can make change in the world is through investing and getting companies to be better and helping my clients to feel better. And I think like I came from it from like a female standpoint and environmental standpoint. And then also being gay, happy Pride, fits kind of into that as well from like a diversity, inclusion standpoint.
How long have you been doing this with your clients? From the very beginning, or like?
I started out at a firm that didn't do a lot of socially responsible investing, even though I was really interested in it. And then I switched to a firm where that's like all we did. And then now I have a firm where that's definitely all I do is.
Okay.
So it's been kind of my whole career.
Okay. So now where you are, that's a focus for you and all of your clients. You invest all of your clients using ESG or sustainable investing.
Yeah, I decided to kind of draw a hard line because I think, one, it's outperformed, the other areas of the market over time. And then also I think it's the direction that investments are going. And so I think from a fiduciary standpoint, yes, this is what we should be doing. I don't even think it's necessarily a conversation of not doing this, just from environmental and sustainable. I think, yep. And my clients, they're like-minded people. So that's what they want.
Great, thank you. Frank, how about you? How did you get into this and what motivated you to start sustainable investing?
I've always liked I started paying attention to it based on the performance potential, the long-term outperformance. And the more I learned about it, the more I really cared about it. And then I remember like growing up, I loved to see windmills. I loved to be part of it. It was calming. It was like tranquility. You see that windmill slowly spinning over the fields. And
tell people where you're from.
I'm from Denmark, which is on a windy day, self-sufficient with wind energy. But it became like just a perfect fit, like where it's like how I really feel, and it's a great investment thesis, and combining the two of them. So I started my firm like 4 years ago, and I only do sustainable investing. I have clients that aren't like super into it. They're with me for their relationship, but it's not like they're against it. It's just I haven't convinced them 100% yet, but they are invested in a sustainable fashion, because I don't think you give up anything by going it that way. So again, from the fiduciary point of view, I think it's as good as anything else you can get out there, if not better.
Great, thank you. Igor, how about you? What motivated you to get involved with this kind of investing?
Right. I suppose my approach was a little more pragmatic, at least initially. So as I mentioned, we specialize in thematic and impact investing, and the idea of thematic investing, which is something I picked up very early on in my career, is the ability to spot a trend, ideally early on, and ideally a big trend. So I would constantly ask myself, what will the world look like in 10, 20, 30 years? What are the problems and how we're going to solve them? And, which are the areas, which are the companies that are likely to solve those problems? And they tend to outperform over a long time. And so that was the basis of my personal investing initially. Then I actually ran a hedge fund for a few years where this was the main thesis. Over time, it has become obvious that a lot of environmental issues specifically, and then later on as well, social issues and social trends have become really, first of all, investable, secondly, profitable, and thirdly, in demand. And so all of a sudden, the ability to actually do good, while actually helping your clients with their investment needs became sort of the additional reason to do this, and the ability to help clients achieve their goals. A lot of the clients that we talk to, we even mentioned that they can actually do things like that, basically express their values through their investments while actually making profit. It's eye-opening to most people, and it's very satisfying to them and therefore to us.
Dan, I see you have your hand up. Do you have a question? I don't know if we can, how we unmute, or can you just type it in?
Yeah, I think the best way is just type it in.
Yeah, just go ahead and post it in the chat. Sorry.
Yeah, if you want to use the Q&A, that'd be great.
Igor, how long have you been working with socially responsible investing?
Since 2015.
Okay. All right, Frank, I think this can be a big question, but can you walk us through how you use
whatever the term.
Sustainable investing with your clients currently, like a little bit of your process and how you do it.
Well, I use an impact questionnaire to kind of figure out like what matters the most to a client, make sure their portfolio at least addresses those concerns. I do start with let's call it a plain vanilla covers all bases portfolio that I can then like make some adjustments to if there are people that feel strongly one way or another. I think it is.
And that's like what is more important to them, so you can focus. Okay.
Yeah. So try to give it a tilt a certain way. I do believe strongly in the fiduciary obligation. So the base portfolio meets all the criteria. I don't need to go into detail. I think we all know that one, but trying to give it a tilt into something they truly care about. My ultimate goal is for clients to go to a cocktail party and talk about their portfolio. Not about the winners or losers, but about the values it represents and how it makes them feel. Like removing some of the taboo and the alpha male from the discussion and make it more about like what money can do and feel good about. So that's how I try to frame the discussions and try to take it to that next level where people like feel really good about what they own.
Mm-hmm. Do we want to get into the details of how you filter and how you?
Well, I use a couple different tools depending on the area. Some are more negative screens where like you try to get rid of something, and others have the positive overlay. It's a bit of a case by case how it's constructed. There's some great tools out there that keep evolving, and I'm so excited to see where it's going, because using Morningstar's Globe rating only gets you so far. It was a great first step, and there's definitely a movement that started there. But now you have a lot of vendors like Ethos ESG, Bethesda. I'm blanking on. There's some great vendors out there where you can like go look under the hood and down to the individual company level to see what's really there. And I think that's really fascinating.
And that may be a topic for us in the future to dig into those details. But thank you, Frank. Ella, how are you using this with your clients right now?
Yeah, I think I have a very similar approach to Frank, where I have kind of a basic portfolio that we put together with positive and negative screens, right? Like I said earlier, there's certain industries we just don't invest in, and then other ones where I'm like, I want to see change. And so it is a bigger conversation with clients, and we do like kind of a 2-parts value questionnaire. One is like an investment kind of values questionnaire, and then another one is like a personal values exercise that we go through.
Mm-hmm.
And then combining that, and then depending on the client's kind of goals and asset level thing, risk tolerance, things like that, we add in different areas that it's mostly adding things in, like I do some non-stock market investing, and so there's some like providing small loans for female entrepreneurs, or investing in forests, or organic farming, things like that. And so we add some of those in that are non-stock market, and then some stock market investments like renewable energy or affordable housing, things like that. And so it's really to kind of the personal preference, but almost everyone starts with kind of the base level.
Customize from there
and all that. Yeah.
Frank, are all of your investments on the market, or do you also do some that are kind of offline impact?
Well, most are market-based, but especially if we're looking at from a charitable perspective, donor advised funds, a great way to get into some of those more impact specific.
Okay.
But yeah, no, most are market-based, but with a little spice of some more of different stuff.
Great. Igor, tell us how you use this with your clients.
Right. So our initial step is very similar to Frank and Ella, which is having a conversation with clients and having a basic questionnaire that asks not just about the facts and their risk tolerance, but also specifically about their values and whether they'd like any of those values to be represented in their investments. And we have specific questions on the negative screen as well. Are there any specific things you do not want to see in your portfolio? Which, believe it or not, initially we usually get answers there first, rather than where they would like some of that money to go to. That may come in as a second and third conversation, interestingly enough. And so, as I mentioned, what we specialize is thematic investing. So we actually build these thematic portfolios. We have close to 500 now. Some of them are built on demand. So a lot of them have been built over time, obviously, and we maintain them, and we try to match them to what the clients want. That makes it a truly personalized experience, obviously. And we're using a third-party broker that allows us to basically maintain those portfolios and execute them with fractional shares, so that it makes sense and we can actually build those portfolios and execute them for our clients. Even within those portfolios, if there are any specific things that we need to, so if we build it with a a positive screen, and then we need to take something out, we can still do that. So it's potentially both positive and negative. So we would build a core portfolio typically, and then would add some of those themes, and most of them are now within the impact or ESG realm, although not all of them. And that's our process, and it constantly evolves. When we have our conversations with clients, we would ask them, how they feel about their portfolio right now, not just in terms of performance, but whether they have any other changes. And yeah, those changes do come up. Certain events happen, and people feel strongly about including something else or not including something else at a later point, and we're happy to do this. And one other quick thing I would mention is that we're doing something that I haven't heard a lot of firms do. We let our clients pick a charity from one of the 5 categories that we pre-select. And at the end of the year, we contribute 2% of the fees that they pay us to the charity that they pick.
That's so great.
We exclude political charities. So these are all worthy causes, and we, like I said, we pre-select them and we'll let them choose. This year, actually, we made an exception. We allowed people to pick a Ukrainian humanitarian aid charity, and some people did. And again, that makes people feel good about what they're doing, because I mean, they already paid those money. That money we're contributing that as part of our fees, and so that hopefully differentiates us. And we've heard a lot of our clients thanking us for that.
Yeah, I love that. Do you feel like your clients come to you specifically because of the sustainable investing?
Some people certainly do. We have some clients that are very, very specific about, to the point where they don't want specific companies to be invested in, not just sectors or industries. But then again, we have some clients who come to us for wealth management overall, for our ability to do financial planning, and for giving them exposure to alternative funds, and don't necessarily think about sustainable as much, but it's an ongoing conversation always. So we have both sides of the spectrum.
Great, thank you. How or what recommendations do you have for advisors to get more engaged with sustainable investing? Igor, how about you go first on this?
Right, that's a great question. I think before I answer this, there's another question that is very important that I need to answer, and this is actually in the title of our presentation today. The question is why? And it's not just why people want to invest in impact investing these days, but also why you as a financial advisor actually need to care. And it's we've gotten this question before from our colleagues several times. Why should I bother? Clients are happy. Why should I rock the boat? Or why should I do extra work without necessarily additional benefit? We've even heard the idea that, well, ESG is a fad to some degree, and it may go away. Why should we adapt to it? The way I think about it is that it's kind of an evolution of investments generally. Decades ago, maybe a century ago, the main conversation about investments was about potential return, financial return, and then the next step was kind of formalizing, identifying risks, and that became part of the conversation. It's not just about return; it's about the risk as well. And then the next phase of the evolution was, taxes and ability to optimize tax consequences of your investments. And I think this is literally the next phase of the evolution. Purpose. Investors demand it. Investors are not just looking at the returns while minimizing tax consequences and risks. They want at least some of their investments to have specific purpose. And if you don't have it right now, just like with any other phases of this evolution I just described, you're going to be left behind, because if people are not asking you right now, that doesn't mean they don't necessarily care. They just know you're not doing it. And if you're talking to prospects, if you don't mention it, if it's not in your brochure, if it's not on your website, you're already a plan B. They're probably looking for somebody who will offer it to them. So back to the original question, the easy first step is talk to people, ask them a question. Normally you would have probably 3 categories of people you're talking to: your clients who are asking the question, the clients who never ask the question, you may wonder why you should even do that, and prospects. And the first step is the same, just ask them how they feel about it. Do they want some of their values to be represented through their investments? Do they care where the money goes? Do they have any places where they definitely don't want to see the money go to? And then just listen, because I don't think I've ever gotten the same answer twice from anybody that I talk to. Obviously, there are additional steps after that, but this is a good starting point. Then any kind of questionnaire, as all 3 of us just described, you may want to develop something like this to get into a little bit more details and get people to think. And just one other quick thing I wanted to add is research shows that younger people, the millennial generation, Gen X, even Gen Z to some point, that are getting into investments, they care more about their values being represented than the older generation. So if you do talk to older generation and they may be set in their ways and not really interested in something new, ask them about their kids, even grandkids. Ask them to talk to them and see how they feel about it, because that will change their mind and it will help you with the highly advertised generational transfer to help talk to their kids after that, because if you're not doing it with their parents, they will probably not want to talk to you either.
Thank you, Igor. I mean, Ella mentioned this earlier, but I'm a huge believer in our money and investment should be aligned with our values. And basically that's what you're saying, is start the conversation of where your clients' values are and how that relates to this. Is that correct?
Yeah, absolutely. And like I said, we do have some clients who initially haven't given it much thought, and they come around after a while. Oh yeah, I didn't realize this was an option. It would be great, this and that. And all of a sudden you're providing a value that makes you more valuable and makes them feel better, and they will likely to stick with you. And if you do your job right, hopefully outperform as well.
Frank, what recommendations do you have for other advisors getting engaged with sustainable investing? And I'd like to hear also, just to learn more about it, where would you start?
Well, you would register with Advisors for Good is a good starting point.
Good job,
Our
Frank.
little plug, yeah.
But it's just to get started, like just have the conversation. If you don't know what it is, you probably have some clients you have a great relationship with, ask them what they think. And just have that conversation. Like, this is something I'm like learning more about. I would like to hear your take on it. There are great resources out there. Like, I have found like people active in this space are more than willing to share their knowledge. It's such a giving community. So reach out to someone who's already doing it, and they'll be happy to share, because if we want to move the needle, the more the merrier.
And that's part of our intention with this group, right? Is all of you, want to share that information.
And then learn what it is and what you can do with it. And I will get into some other things here, but the primary thing is just to get started. It is not as complex as it may seem. You can always fine tune over time. It's the same way you do any other parts of the job. Like, you get started and then you learn and then you improve. And the same with this. It's not going to be perfect day one, but getting started on the process is that first step is important.
Well, and I guess part of my perspective is there's so much information out there that it's easy to get overwhelmed. And so having others to help with that is part of what I'm hoping this group can contribute.
Yeah.
Go ahead.
And look as to who pays for the stuff you're reading, because that could flavor the outcome a little bit, and make sure you get diversity of views. Don't just go to like the big Wall Street firms that are selling products. They have great resources. I'm not saying don't go to them, but you should also get your input from other sources.
And be aware. Exactly,
Yeah.
right. How about you, Ella? What recommendations, do you have anything to add to Frank or Igor on how to advisors get more engaged?
Yeah. I think there's a few things. And I think one of the things that, when you asked this question initially, or even when I was asked to be on this panel, I was like, I don't know anything about socially responsible investing. Like, who am I? And I think even after doing this for years, everyone still feels this way. I was talking to Bob about like, it's an ever evolving industry
And quickly evolving, I guess, is the
Yeah.
other from my perspective too.
And you're never going to be perfect, right? And everyone's going to want different things. And that's part of the values thing where it's really hard to be like Igor was talking about, like, yeah, it's easy to have like the negative screens, but it's hard to have the positive, it's tricky. And so like giving yourself grace and letting yourself just learn and grow along with your clients and just take baby steps, right? Like there are so many good resources. One of the ones I really like, I'm not selling anything and not like endorsing it, but Ethos, ESG, that wait, is that what it's called?
I think that's what Frank called it. Yeah.
Yeah, it's an awesome website, right? Where you can go in, you can look at what you are currently investing in, and it'll tell you like what are the investments in that are, they rank it A, B, C, D, shareholder engagement, all of these things. And so you can start by looking at what you currently have and then being like, oh, wait, who knew? That's terrible. I want to move to this, right? And so there's these great resources, people and products that can help you to just kind of figure it out. And then also joining a group like this, like I'm constantly learning and being open to hearing what other people are doing. And I think to Frank's point, just starting. Anything is better than like doing nothing. So like greenwashing, I think is a big thing. But even, some greenwashed funds still don't have weapons in there. So, little movements.
With that great point, Ella, to kind of segue into one of the questions we had, it was from Catherine. And, I'm going to summarize and paraphrase hopefully accurately. Basically, we think, gee, if I don't invest in a particular company, it's an equivalent to boycotting and not buying products from them. But because of the way markets and equities work, it's not really equivalent. And so greenwashing, this concept of just slapping some marketing on something to try to sell it, is an issue in the industry. And also, how do we actually have meaningful impact with ESG, SRI, socially responsible investing, impact investing, however we want to phrase it. And that, I think, pairs nicely with your next question coming up here, Tara. So that would be a great point to just touch on, I think, for all the panelists.
Yeah, who would like to just go first on that?
Well, I can go. I think greenwashing is a real thing where it's more marketing than anything else. And that's where I see a lot of the ESG products out there. They're ESG aware, meaning they just do the weights a little differently, but you still own all the same bad stuff. There are thousands of investment opportunities out there, and finding one that meets all the criteria is possible. You have to search a little bit longer, but it's totally doable. As Ella said, I love Ethos ESG because it does look under the hood. Where I do think you make a difference is finding a fund where the fund manager is an active shareholder and votes for the issues that you are investing in the fund for. That is like money talks, and you don't need to have 51% of a company to make a difference. a lot of these fund managers team up to get resolutions put up for a vote, and more of those are getting approved by shareholders, even against board recommendations. So it does have a meaningful impact. To Ella's point from before, like doing some of the off-market investments as well, as a supplement to something you truly care about, whether it's microfinance, local projects. I think that does create an impact, in addition to the goal is over time, cost of funds changes for the companies that are good versus bad, to put it black and white here. But you have easier access to capital, to growth. Same, like it doesn't just go for stocks, it goes for your bond ratings as well. And if your cost of fund changes, it makes it more or less profitable to keep doing what you're doing. And hopefully that will change over time. But I am a huge believer in active shareholders, and try to find the fund managers that vote.
To add on to what Frank's saying, I think one of the things that I also think about is, Igor touched on it earlier, like, are they actively socially responsible and engaging with companies? And are they saying this on their website? Are they, putting out there what they're saying? Because I think there's certain ones, some very, very large fund companies, that maybe they're engaging with companies, but it's probably not the voice that we're thinking that we want them to have, right? Like, they're engaging to make more money for their shareholders, as opposed to like, let's stop cutting down forests, or, whatever it is. And so I think choosing fund managers who have a very engaged voice, but also an engaged voice to push forward, inclusion, environmental factors, things like that, I think is so, so, so important. And then if you have clients who hold large, like just large positions, you can engage with someone like As You Sow, or, different organizations who do shareholder engagement, and you can have your proxy votes be used as like a collective bargaining tool. And they're doing some amazing work. And so there are different ways to think about, if you do hold shares that you don't necessarily love, maybe engaging with those companies and having that voice. Because I think, to, Catherine's point earlier, divesting might not be the way that you want to make your voice heard. It might be, right? I think it's like really thinking through what the end goal is.
And how to have that meaningful impact.
Mm-hmm.
Igor, how about you? How do you think you can make it more meaningful?
I think the biggest issue where I generally start from is the fact that there is a very big lack of standardization in the space. So there is no standard on what you should measure by, or exactly, what should be included or excluded, or how you should do, the weighting, or there's not necessarily anything that you absolutely have to invest in if you're in ESG, or absolutely have to exclude if you're in ESG. And there are definitely some things that seem like obvious choices, but not always. And activism is one of those things. So people may remember last year there was a little company called Engine Number One that with 0.02% of shareholder vote won two chairs on the board of directors of ExxonMobil, trying to change the company from inside. So to Frank's point, you don't have to have 51% of the company. There are other ways of doing it, and this is happening now in a lot of other places. Activism has been around for a while, but specifically impact investing activism is relatively new, and it's picking up steam. So I would definitely look at that. And in terms of your investments representing your values, again, if you're investing in ExxonMobil for the point of basically trying to change the company from within, and you're hoping to add your voice to the other shareholders who will vote for certain things that will improve the company from within, then there's maybe nothing wrong with it. No real conflict between you're trying to be green and investing in ExxonMobil, but you need to know that this is the purpose of it. A similar example, recently we've done a lot of research in terms of fighting climate change, and this is potentially a very separate item that we can probably spend an hour on. And I don't want to go into too much detail, but the one thing that we found that seems to have the most direct impact is the ability for companies to build products that will capture and store carbon emissions. Probably the most direct way, most pure play to do this. And when we started looking at companies that do this, turns out that 70% of that portfolio is traditional fossil fuels. And in fact, ExxonMobil and Chevron are the two biggest leaders in the space. So that naturally presents a big question to any kind of potential ESG investor. Is this what I really want to be doing? Do I want to be investing in these companies for this purpose? This is a question largely for the investors and for their financial advisors. And you're not going to find that in many funds. And funds will always have some methodology, and you need to know what that methodology is and believe that it reflects your values closely, because a lot of them may have the label and all kinds of greenwashing and not necessarily do what you expect.
Yeah, I mean, from my perspective, as you said, information and measurements are hard, like they can check one box, but if you, drill down, you really have to drill down to get the information. And I almost feel like it's at such a deep personal level to get the information. So that's, I think, something we want to try to help with here. If people have questions, please put them in the Q&A. We're quickly coming up to the top of the hour. Ella, what do you see are some of the opportunities and challenges around sustainable investing for you?
Man, that's a big question.
It is a big question. Just choose one idea or one thing.
One that I keep, I'll stick with my first one. The first one that I keep coming back to is what Igor was touching on is I want us to make like the biggest impact possible to move companies to be better. And so I think that does mean a collective voice. And I think that's part of what our industry is lacking is like, I don't want to invest in this. And I don't want, like me divesting from Amazon means nothing, right? But like a large group of people divesting from Amazon is something different. And so I think kind of having a collective goal and then having our investments reflect that. I think that's the hardest one.
We got some really great questions. So one is, what are the ESG issues you hear most about from your clients? Frank, how about you? What would you
clearly, environment is always one of them, quickly followed by, I guess, the equity, both like gender equity as well as racial.
Okay.
So like the social justice movement. I think a lot of it comes down to also answer another one, like about proxy voting. It's finding the fund managers and actually interviewing them as to their, I use mostly funds and ETFs, but interviewing them as far as their process and what they stand for. So, because so much more goes into it than the mechanics behind the scenes. It's the people running the operation. Mm-hmm. You have to know what they stand for. They vote the proxies. They have a little more voice. They know other players in the field. To Ella's point, like they band together to create a larger voice. So a lot of the issues is access to data. You have gender equality data, like it's relatively easily accessible, but you don't have like racial data on racial diversity or other things. And how do you measure like equal pay? Again, that's for a totally different topic. But I think pushing to get more data reported or have groups that actually look into this, I think is key for the future. So it's a work in progress. Unfortunately, we don't have all the answers yet, but that's also what makes it fun to be part of it.
Yeah. Deborah asked, to what extent are any of you targeting racial equality as part of your ESG strategy? And if you are, what challenges have you experienced? Anyone want to jump in real quick on that one? I know, Frank, you.
Well, I'll kind of touch on, because I have found quite often the people that score well in a gender diversity also score well in a racial diversity.
Oh, they do.
Because from the limited access to data I've seen, it's more they're open to like the different lens to get different people involved. So it's a good proxy while we're still developing the data.
Mm-hmm. Go ahead, Igor.
Yeah, I would just add quickly to this. So there are some products out there, mostly ETFs. I think there's a couple that I can think of that target this particular question and other questions around the social issues. And the key is data, as Frank mentioned, but also methodology. So you have to know what the fund is doing to actually say that. So you know they're not greenwashing and just giving you a marketing material, that they actually are doing what you'd like them to see. So we build our own thematic portfolios, and in case of, for example, racial equity, we use third-party nonprofit tools to find surveys on companies, and we use that as at least an additional screen, or sometimes the only screen, depending on what people are looking for. So we're always up to the challenge to build an actual portfolio for people if that's their focus. But it's hard because the data is not always available and the data is not always accurate. There's no way to verify it.
So we are 2 minutes away from the top of the hour. If people have questions for future, we are doing another event in September. And so we would love to hear topics or questions you have for us to address then. Here's information on that. Bob just put it up. And we have a poll before you leave. If you could just give us a little feedback on this. And I don't know if anyone is willing to stay a little after if we have some more questions of people, but we so appreciate everyone who came. I feel like we had lots of great questions, and I just feel like we hit the tip of the iceberg here because there's so much more still to talk about. But we wanted to just get started and leave you wanting more. So please feel free to go to our website and even post questions or join our group if you would like to learn more. So there are some polls going up.
Can I add that we're also talking about trying to do monthly virtual meetups. Yeah. To share knowledge and learn and engage, because all of us are still learning. It's a work in progress here.
So that's what Advisors for Good is. We're doing monthly meetings, and would love for you to join us if this is something you're interested in. Grant, anything else that I missed? Or
I think that was a fantastic panel. Thank you so much for everybody who attended here today, and thanks so much to our panelists. And Tara, I think, boy, we just had a lot of fantastic content. So yeah, with that, we'll close on time. And if anybody wants more information or how to find us, connect to us, advisorsforgood.org. And there's the poll. Wonderful. That's fantastic. Thank you so much. Yeah, I think that's all we have for our presentation today.
All right. Thank you, everyone.
Thanks, everyone.
Thank you.
We want to do good.
We are doing good.
I know.